Alright, guys, welcome to my first unofficial lecture. I'm Cam from Flexin Financials, and you guys know why you're here. We're all here to build our wealth via the stock market. We're here to abolish our savings accounts and, of course, make us some profits in PJs. So let's get right into this. I made this video because I wanted to break down kind of like the psychology behind um, my DraftKings swing trade this week, why I saw it as being a good opportunity, why I bought where I bought, why I sold where I sold. So, in this video is going to be kind of like an introduction to technical analysis. I'm going to try to like explain things, but I do plan on making videos about like each specific component, or at least common components when it comes to technical analysis, like what indicators there are, like what support levels are, etc., etc. So you guys are gonna like kind of get your feet wet in this video, but stay tuned for more in-depth videos in the future. Cool, you got all that stuff out of the way. Let's go. So before we actually talk about the trade itself, there is one thing that I want to introduce you guys to when it comes to technical analysis, and that's called the RSI, aka the Relative Strength Index. Now, what this indicator does is, well, first of all, that's this right here, this little like horizontal section here. And what this is telling us is when a stock is overbought and when a stock is oversold. Now, when it comes to the RSI, basically level 70 and above means that the stock is overbought. A lot of people bought the stock up, it ran up, and now it's pretty much primed for a correction. And that's pretty much where you want to be hitting the exit and start taking profits if the investment is a shorter term trade. And on the flip side, when the RSI level is down here in the 30s, this is where a good buying opportunity or entry into the trade usually is. So now that we got that out of the way, let's get down into some examples of how to use said RSI when it comes to an actual stock, in this case, DraftKings. So, as I said before, when the RSI is at higher levels around 70 or more, that's when you should start hitting the exit. And we can see this perfectly on this chart here. As we see here, the RSI, and I mark these as like red because it's like red alert, like get the fuck out of the trade, take your profits because it's probably going to pull back. And sure enough, boom, RSI hit 70. Guess what happened? It peaked, started correcting and coming back down. Here we see the RSI hits red here, or sorry, 70 here, boom, starts correcting down. And as you see, these pretty much perfectly align, pretty much perfectly aligned. Same here. This one didn't exactly hit 70, but you know, it's kind of trending up there, maybe hit like 60, 61, something like that. And then again, boom, starts going down to the downside. On the flip side, like I said before, when the RSI is around 30, that means that the stock is oversold. A lot of people have been selling it, which means that it's due for a reversal to the upside. So as we see here, the stock was terribly oversold. It looks like it hit what, like 20 here, and as we see, it made a move to the upside. And you can see like I labeled this one green because it's like, okay, I'm giving you the green light, like this is a good entry, pull the trigger. We can see the same thing back here, and like, I guess this is the beginning of the year. Stock reached oversold levels. Sure enough, boom, started moving to the upside. So there's a pattern when it comes to like these different indicators, and you just have to be able to look at the chart and understand like what it's telling you. It's telling you a story. If you can interpret that story, you'll be able to make some good trades and be a profitable trader. So that's what I want to introduce you guys to today. Now, let's specifically talk about the DraftKings trade from this week, and as in this week, June, or the week of June 11th. Okay, so if you follow my Twitter, you would have seen that I was already looking to buy some more shares of DraftKings. This is like a high conviction stock for me. I want as many shares as possible, but obviously I want them on a discount. So I tweeted out, I was like, hey, like I'm looking at DraftKings, um, an area of interest for me is $45. And this is when the stock was up at like $49 or so. Literally the next day, there was a short report released about DraftKings, and the stock was down like 12% in the pre market. And guess what price it hit? $45. So, me being like, ooh, this is on a discount, let me buy. I come over to the computer, I look at the chart, and guess what? $45 aligned with the support level. So, if you don't know what a support level is, that's basically a general consensus across um, traders that says, yeah, we're willing to buy at this price point. So as you can see here, boom, we get a bounce off of this $45 level. It's not perfect, but you know, it's pretty close. It's you know, it's in that area. Same here, we get a bounce here, and a bounce here, which is, you know, where I bought at. So me seeing this chart, I immediately was like, okay, bet, like this is a good entry. I'm about to pull the trigger. So not only did I buy shares at this level, but I also bought call options at this level because I was very confident that this would move back up to the upside relatively quickly, especially because the move to the downside to begin with was like the short report had no basis. Like it was pretty much guaranteed that the stock was going to move back up. I didn't know how fast it was going to be, but I knew it was going to be relatively soon, um, based off of what the report said. And then I knew this was a good buying opportunity because of history. The chart, like I said, it's telling you a story. Just got to be able to read it. So yeah, I ended up buying here, and literally that same day, actually, it ended up recovering and moving back up to the upside. So I pretty much took my profits like somewhere in this area, because I mean it was literally the next day. And when I say take profits, I meant on the short-term option. I kept the shares. I'm never selling the shares, at least not anytime soon. But anyways, so yeah, I took profits here. As you can see, the RSI was still like pretty low at this point. Um, the reason that I took profits is because I just have like a personal rule where if I reach 20% or more, like that's when I'm starting to look for the exit. And I mean, clearly, as you can see, like this was a pretty good place to exit since it kind of moved back down to the downside um, shortly after. So, yeah, that was a pretty successful trade. Um, and yeah, that's pretty much all that really went into that thought process. Um, I think that's pretty much everything I wanted to talk to you guys about in this video. Like I said, I feel like I was going pretty fast in here, and again, I'm gonna like make individual dedicated videos to like again like what the RSI is. As you can see, like this squiggly line here, as well as this red line here, these are called moving averages. We'll make a video about those, and we'll talk about what they are and why those are used, and how you can use those to also help you with your entries and exits when it comes to stocks. I kind of introduced you guys here to the support levels. So we'll make like a dedicated videos about this. Like, I got you guys. Like I said, we're all here to build our wealth, make some money, make some profits in our PJs, and yeah. So if you found this video helpful, make sure to like the video, subscribe to the channel. There's going to be a bunch more content that's going to be helpful, and we're all going to be some profit snipers out here, okay? Just bringing in bands. So yeah, share this video if you found it helpful. Everybody eats. Happy Friday. I'll see you guys in the next one.